Welcome to Financial Issues, where we join reality with truth, helping you make the most of your money by honoring God with your investments. Now listen in as we give you the practical tools and advice you need to become a biblically responsible investor.
Welcome to Financial Issues. I'm your host, Shana. Thanks for tuning in today. We are so glad that you're here. We hope that you learned something about stewardship today. We hope that you are educated and edified to do the good work of stewardship, to participate in the privilege that God allows us to exercise control over assets that he gives us: time, talent, treasure, all of those things we are given from the Lord, and we are given the opportunity to manage those things for the good and the glory of the Lord. So that's why we exist as a ministry. Financial Issues is a ministry that helps to educate people about financial issues from a biblical worldview. We are a listener and partner-supported ministry. We hope that you will choose or have chosen to support us in one of those ways, where either you give monthly to the ministry or you pay for an annual partnership, which is just $132 a year, where you get access to our asset allocation models, our buy list, and instructions on how you can build your own biblically responsible portfolio, where you're not being yoked with the woke companies of corporate America. Speaking of the partners, we do have a partner conference called this Thursday. We hope that you will tune in. If you have questions, please email them over to Pat. Please make sure that they're questions that are edifying to the group of partners, rather than just like specific portfolio questions. And that is going to happen noon this Thursday. You should have or will get an email giving you instructions on how to do that, or you can just log into the partner side of the website and get the phone number that you can call in. And of course, after it is reviewed and compliance approved, it will be posted to the website so that you can listen if you happen to miss it. So on today's show, we're going to answer some of the questions that you guys have sent in. We're also going to have Jason MacDowell on, as we do most Mondays, to talk about today. We're going to talk about the Trump administration's plan to expand 401k options and what you may be able to invest in if you're a 401k participant in the near future. We'll also get encouragement from the scripture, stewardship wisdom, which we'll start with now. Our stewardship verse of the day comes from Isaiah 28:29. This also comes from the Lord of hosts. He is wonderful in counsel and excellent in wisdom. Sounds like a great place to get ours, huh, Seth?
Yeah, it sure is, Shana. You know, if we're going to succeed making much of the name of Jesus with our money, which is really much of what our purpose is here, Shana, we have to be wise. We have to be wise. We can't do it without wisdom. So I do hope that all the listeners today will seek wisdom from the Lord of hosts, as this verse commands us to do. It's a good one.
That's right. Yeah. You know, I've often heard the phrase that the BIBLE means basic instructions before leaving Earth. And good. You know, I know you men don't read instruction books.
Not as much, yeah.
When you get something to see how it works, I mean, you're kind of hands-on. If you're anything like my husband, I guess you figure it out. The instructions, you know, where are the instructions? I don't know. It didn't come with any. Yes, it did. They're still in the box. Sometimes, especially when we get stumped, it is really good to go and get that instruction manual. And that is the instruction manual for life. That is the place exclusively the place where wisdom is found, because, you know, God made it all, so he knows how it all works. And he's happy to share with us how we should use things and how we should work with things, so that we make sure that we're using them in the right way. And, you know, this scripture too reminds me of kind of what we talked about on Friday. I guess because my brain is so geared towards financial issues, not the ministry itself, but the financial issues of the day. It's the field that I work in, the field that I've worked in for decades. So a lot of times when I hear scripture, I tend to be drawn toward the stewardship approach to what the Bible is trying to tell us. So, it is ingrained in this ministry. One of the things that you'll often hear said here is that we don't want to yoke with the woke companies of corporate America. But what that means on a deeper basis is that we want to honor God. We believe everything belongs to God. We want to honor Him in everything that we do, including the way that we invest. And so we've come up with a very practical way. That's the partnership that you heard me talk about earlier, that you can honor God, that you can implement a practical strategy to show God that you honor Him and that you believe that what He says is true and that you trust His instructions for life and for godliness. And we also talked about that getting godly counsel. So there's no better place than the Word of God to get godly counsel. And we weave that in to every show. It is, I say we weave it in, but it is the basis of what we do here at the ministry. We believe that the Word of God is gospel truth. And we believe it so much that we want to find a way to live it out in our everyday lives. And that's what biblically responsible investing is all about. That is what this ministry is all about, to teaching the body of Christ wisdom in stewardship. So I just wanted to bring up a little point here. Last week, I saw an article. There's been some chatter. Warren Buffett is a well-respected investor that has been investing very successfully for decades and decades. Now, he does not do biblically responsible investing. I'll just put that out there up front. But, there's hardly any investor in the world that knows anything about investing that hasn't heard the name Warren Buffett. And last week on August the 14th, Berkshire Hathaway, which is the company that Warren Buffett started, and they invest in publicly traded companies, and you can actually buy shares in that. We don't recommend it because they're not biblically responsible. But in their 13F filing, which is a filing that publicly traded companies have to make when they're accumulating large positions, they indicated, and there was much chatter about it ahead of this 13F filing to see which companies, everybody wants to know which companies Buffett's investing in. So interestingly enough, we had put a company, one of the home builders, back on our buy list. It's CD26. If you guys are partners and following along, you can go see. If not, I'm sure you can Google enough news to figure out which one I'm talking about. But we had incidentally and unrelated to this put CD26 on our buy list 2 days before this announcement was made. It had nothing to do with what we thought about whether or not it would be on this list. It just was something that we had been talking about for a while. So just an incidental thing that I wanted to mention there.
That's awesome.
Let's answer some questions. We're running out of time.
Yeah, no, let's do it. We've got one from Joe here. Joe is saying, Shana, God bless this ministry. I'm enjoying learning as I self-manage my new portfolio through a brokerage Roth. They don't offer options and minimal mutual funds, though. He's got a couple questions. Number one, if I plan to retire in 1 to 3 or 1 to 5 years, are mutual funds still good to invest in? And then number two, related to that, who should I buy Timothy Mutual? Yeah, go ahead.
Let's do one at a time because I'll forget.
Yep.
So number one, 1 to 5 years until you retire. Yes, that still means, to me, it means that you have a long-term time horizon. 1 to 3 years is not a long-term time horizon, but that's not the end goal for you. So when you retire, you're just beginning a stretch. I don't know how old you are. I don't know if it says there, but most people, let's just assume the average retirement age of 65 years old. Well, at 65 years old, you still have a 20 to 30 year life expectancy. So 20 to 30 years certainly fits into that long-term time horizon, and it means that mutual funds can still be appropriate.
Awesome, Shana. And then the second question here is, who should I buy Timothy mutual funds through, since I can't buy them through Wells Fargo? And he's 62, by the way.
Yes, so there are some discount brokerage accounts that you can buy them through if you want to just switch from Wells Fargo to a different platform. Some of the ones that you could check out, there's no recommendations, but some of the ones that you could check out are Schwab or Fidelity or Vanguard Brokerage. Make sure you use the brokerage side of it. Interactive Brokers is another one. There's several other ones out there. Or for the portion that you want to invest in Timothy Plan, you can go directly with Timothy Plan. So you can contact them. You can find the information over there at timothyplan.com. And there's a phone number that you can call. There's very, very nice people there that will help you get connected and help you if you want to invest directly through the Timothy Plan. That is certainly a way that you can do it. So.
Awesome, Shana. Real quick one here. Linda is asking about TE1. It's risen to 5% of her portfolio. She's wondering, should I sell some of it? There seems to be no end of its rising, and she's 74.
Well, it is in an industry that is heavily under accumulation. It is an industry that has a very, very bright future and a lot of money to be made. So although there could be bumps in the road, I expect it to be a long-term winner. But if it has risen to more than 5% of your portfolio, then yes, I would consider taking some money off the table. There are plenty of other places that you can deploy that. You just don't want to get too concentrated in any one company. Diversification is a tenet, foundational principle of our strategy. All right, folks, I hear the music. That means we've got to take a break, but we hope that you're going to stick with us because Jason MacDowell is coming up, and we're going to be talking about how options for 401k investing could be changing in the near future. Stick around. We'll be right back.
Navigating through investment options can be challenging, especially when you're determined to uphold your God-given values. Every dollar you invest is a vote for the world that you want to live in. Let your values guide your investment decisions and help to shape the culture in which we live. Become a beacon of light and pave the way with biblically responsible investing. Timothy Plan, where faith and finance collide. Before investing, carefully consider the fund's investment objectives, risks, charges, and expenses of the investment company. This and other important information can be found in the fund's prospectus. To obtain a copy, visit timothyplan.com or call 800-846-7526. Read each prospectus carefully before investing. Investing involves risk, including the potential loss of principal.
It's easy to get caught up in the rush and forget about what really matters. Too often, we invest in stocks without knowing what they stand for. When your investments align with your values, your money speaks for you because biblical values matter, even when investing. Learn how to invest biblically and responsibly. Visit financialissues.org to learn more. That's financialissues.org.
Hi, this is Shana Bird, the host of Financial Issues. The Financial Issues family is so blessed to have saved tens of thousands of babies, all thanks to the generous support of you, our listeners and viewers. For $140, you can sponsor 5 ultrasounds. Please go to preborn.org, that's preborn.org, or financialissues.org and click on the Preborn logo. Save a baby, save a life.
Securities offered through G.A. Reppel & Company, a registered broker-dealer and investment advisor, member FINRA and SIPC. Opinions expressed by Shana are hers alone and are for informational purposes only and do not necessarily represent those of G.A. Reppel or the outlet on which you are listening. You should consider how the information applies to your situation prior to personally implementing it and consult any financial professional you work with to make sure it's applicable to your financial plan.
Welcome back to Financial Issues. Thanks for hanging around with us. I'm excited to welcome my friend and colleague, Jason MacDowell, back for us to have another conversation about a financial issue that could be impacting you and how you invest in your 401k in the coming 6 months to year and a half. So President Trump has signed an executive order that could significantly change what you are allowed to invest in through your 401k plan. So for decades, most of us who participate in a 401k have been limited to the pre-selected list of mutual fund companies that our employer chose for us to be able to invest in. In some cases, companies are now offering self-directed options, self-directed 401k accounts that helps to expand those choices to include things like individual stocks, bonds, mutual funds, and just about anything, ETFs, anything that you can purchase in a self-directed account. So this new policy could open the door to new types of investments that the average mom and pop investor have not been exposed to and not have access to on a regular basis in the past. Things like private equity, real estate, infrastructure projects, commodities, and even certain digital assets. Yes, we're talking crypto. On the upside, this is about giving everyday investors the same types of access to investments that have long been available only to the very wealthy or large institutions or investors that are considered to be accredited investors. Now, done wisely, this could mean greater diversification, potentially higher returns, and more tools to build wealth over the long term, especially for younger investors who have many years that they can commit to making their investment goals come to fruition. But Scripture warns us that with greater opportunity comes greater responsibility. These kinds of investments often carry higher fees, less liquidity, and more complex risk than the average person is used to assessing. So, Jason, welcome back. Thanks for being here. You want to get us started on a deeper dive into this issue?
Yeah, the issue right now is there's government involvement. So discussions about potential federal minimum coverage standard that has occurred in the recent years started with 2021's Build Back Better Act, which did not pass. But the law was looking at requiring businesses with 6 or more employees to offer a retirement savings plan through payroll reduction, automatic enrollment, and this plan, since it did not pass, gave indication what the government's looking at. They're putting 401ks in the crosshairs. There has been an updated draft of a bill that's now looking at, on the federal side, requiring businesses with 10 or more employees to provide either a state-sponsored plan or an auto IRA there for a private 401k plan. So this is just saying, hey, there's already some state mandates that are there that exist, but it looks like the federal government is wanting more employers to offer these plans for their employees, no matter how many they have. So right now, there's approximately $8.7 trillion held in 401k plans. So yeah, that looks attractive to our government.
Yeah. You know, I guess that's because they have, the government has pretty much decimated the Social Security program, and it's at risk of going insolvent. And so now they're trying to transfer the burden onto the back of companies. So, you know, I'm never a fan of government involvement. In fact, President Reagan said in a 1986 speech that the 9 most terrifying words in the English language are, "I'm from the government and I'm here to help." So, you know, in this case, I would be for more freedom in allowing individuals to choose the investments that they want in their 401ks. But I sort of began to wonder, okay, so why is this happening? One possibility is the idea that Trump wants to be a crypto-friendly president, and he wants America to benefit from crypto adoption. So, Jason, talk about the executive order and how this ball has sort of been set in motion.
So on August 7th of 2025, Trump's executive order directed the Department of Labor and the SEC to review the fiduciary rules to facilitate crypto and other alternative investments, which you covered a little bit of, in 401ks. So this essentially was to unlock access to the almost $9 trillion in the 401k market. With this administration, I've seen a lot of what Trump talks about, or we've all heard what he talks about forefront, seem to slip in that private equity and those other alternative investments as well. But this capital, it looks like they want to drive more capital into crypto, and opening up the 401ks is accessing it. So the order instructed the Department of Labor to re-examine its guidance to employers and plan administrators on incorporating such assets into retirement plans. These are I guess you could say high risk, or illiquid. This becomes an issue for, the average investor. Maybe it's just somebody who started in their 20s, they might be young, or they're getting close to retirement and in a new job. It's just offering something that, is this really going to benefit the end person, and whose liability is it going to be on? Is it going to be on the employer? So
that's an interesting question. The thought has crossed my mind too that, perhaps these big institutions, the ones that are already preparing products to be put in the 401k menus, the BlackRocks of the world, that potentially they may have struck some kind of sweetheart deal with Trump to get their products into these 401ks. So I'll just say this: we must continue to pray for our president, that the Lord continues to protect him and guide him and keep his ways above reproach and, uninfluenced by some potentially bad actors. So talk about the cryptocurrency a little bit.
Yeah, right now, just with cryptocurrency and just alternative investments as a broad category, as you covered, real estate, it's going to include cryptocurrencies, private market assets. I like to think of some of that might be exploratory oil and gas drilling. So super high risk and questionable reward. We don't know. Yeah. So that usually requires an accredited investor, like you mentioned. So this is an actual regulated proof of sophistication deemed accredited investor, or it's someone who has a net worth of over 1 million, excluding their primary residency, and then individual income exceeding 200,000 or exceeding 300,000 in the household for the previous 2 years. So you have to make some money. You have to be a wealthy investor or institution in that case. So private equity firms, as you mentioned, are looking into introducing these new products to be defined, but they're running into some issues. One is the fees. So private equity by itself collects about 2% management fees and has a 20% of the profit included in that fee. 401k plans are traditionally known to have much lower fees, must be favorable for the employee and to build a nest egg for retirement. That's traditionally how they look at it. So PE firms right now don't necessarily want to be dealing with the retail small investor. They're used to dealing with the big institutional investors and the sophisticated ones. So that also comes with cryptocurrency. It's a very highly
speculative.
Skeptical too. But it's, the Genius Act might have been just passed, but it's not going to implement the regulatory needs to help protect these individual investors. So, we already know that there is some regulatory means, but what the cart before the horse? Who's going to come first? The Genius Act regulatory basis, or is it going to be the ERISA, the governing acts for the 401k plans that will implement their protections? So, that's kind of where we're sitting.
The prior rules on it kind of hid behind the reasoning, hey, we want to protect investors from themselves, so we're not going to let unsophisticated investors into these kinds of investments. So now I have to wonder, okay, so why would the government support this? And, I think you alluded to that in the fact of how much money is in those 401k plans and IRAs in general. Well, guess what, folks? That is all money that is to be taxed in the future. So whether, if these types of investments do unlock potential for higher returns, well, guess what? That's more money that is being grown, tax postponed, that's going to be taxed at some point in the future. So it's future revenue for the government. And, whether anyone realizes this or not, I think sort of one of the forces behind this is the glut of money that has been created out of thin air and lacks places to go. So we have continued to create new investment opportunities, and that's where, private equity has really got its footing. That, and because the IPO market has been essentially dead since COVID. Now, I will say this too, and this is a risk to some of these alternative investments, is that the IPO market is starting to come alive. That means more shares are coming onto the market, onto the market where there's transparency, when you can know a lot of things about a company that you want to invest in. Also, the money supply is starting to decline on a negligible basis right now, but the Fed is starting to take money out of the economy through quantitative tightening. And, if company margins come under pressure, they might not, because of maybe the tariffs, they might not be buying back as much stock as they used to, which means that there's more, there's more places to go in the traditional market sense than there are than there used to be. So how does this apply to us? Let's not neglect to get there quickly. So start us on that conversation.
Yeah. So what this might open up, Shana, is might lead for more employers to open up options of self-directed 401k. So whether or not this stuff passes, be a good recommendation to ask to see if your 401k allows you to self-direct. You might be able to be biblically responsible if they allow for individual stocks and holdings. So as a FISM partner, that might actually be a good thing because they want to offload it. The risk might be just a checking of a box. Like if you're in a retail account, I know if you have to move up in your risk assessment because you want to select a certain holding in there and they deem it very risky, then what you have to do is you just acknowledge, you check a box, and that's it. And then it's up to you.
People don't pay attention.
Yeah. So
let me ask, how many people have ever read a prospectus? Right.
Right. So that will allow that there. But we're really going to caution the listeners and partners to look at these options. I mean, first, that self-direct might be really good, but these are really risky investments here. So
to sum it up, God is in favor of free will, and so am I. The exercise of free will does not always end well. I can attest to that in ways that I have used my free will that has not ended up well. But it is not the government's job nor our employer's job to prevent us from exercising our free will when they decide that what we may be doing may not turn out well, not their place. So unlike public stocks that you can see priced daily, private investments may only be valued a few times a year. They can be higher in fees. They can have less transparency. They can have less liquidity. So if you do get access to these options, be diligent, count the cost, make sure that you understand what you're getting yourself into. We got to go for now. If you're listening to the full show, hang around. We're going to be back right after this.
In a world where financial decisions can feel overwhelming, it's easy to lose sight of what truly matters. But what if there is a way to align your financial goals with your deepest values? Financial Issues has helped us navigate the complex world of finance through a biblical lens. By prioritizing and investing in a way that honors God, Financial Issues has empowered us to focus on what truly matters: our family, our faith, and our future. With Financial Issues by our side, we can invest knowing that our financial decisions are in line with our values. Take the first step today and become a Financial Issues partner to access rich online resources, training tools, and guidance for biblically responsible investing. Head over to financialissues.org and learn how to invest your money in a way that honors God. That's financialissues.org.
When a woman comes into a center, she's being pressured from her family, from her friends, by her circumstances, by the rhetoric of the culture to believe that this is a quick and easy way out. If a woman sees her baby on ultrasound, it doubles the likelihood that she'll choose life. And on top of that, we share the gospel of Jesus Christ with her. This is why you should support preborn. The donations that you give actually make a difference. Last year, 59,000 babies were saved because of what you have done with your generosity. And so we just encourage you to make a difference at whatever degree you can, whether you can do a $28 contribution for one ultrasound, whether you can underwrite an ultrasound machine for $15,000 or 10 ultrasound machines for $150,000. Where does the Lord have you so that you can make a difference?
To find out how you can support the life-saving mission of Preborn, go to preborn.com/FISM.
Welcome back, folks. Great to be here with you. I'll be taking you the rest of the way. Seth Udinsky here with the Studio A team. I always enjoy the wisdom that Shana Burt and Jason MacDowell give on Monday mornings. It's a good time. Great to be here with you, folks. I hope you had a great weekend and a blessed day of worship and excited for another week at hey, just want to remind you, our petition for Tesla is still live right now. So if you haven't gotten the chance to sign it, please do so. You can also share that link with your family and friends, people who care about it, whether they're investors or not. If you care about pushing back against the darkness of this world with the light of Christ, this is a great way to do it, folks. So you can sign that petition for Tesla. Get this to Elon Musk's desk, to his eyes, and see if we can't see some real good change happen there. Whether we see the change or not, we're doing this faithful, folks. So it's exciting. We already have almost 500 signatures, which is great. So let's hit that 500 mark today. All right, Sam, big news over the weekend, the fallout between Trump and Russia. So Trump was meeting
Maybe don't say fallout with Russia, you know?
Yeah.
That PTSD.
Yeah, that's exactly
People from the 80s.
Right. Try this. How about the Trump-Russia kerfluffle? The tussle? I don't know. Anyway, Trump met with Putin over the weekend.
There you go. Yeah. Get back on track.
What came from that, Sam? You know, best case scenario, you'd see a ceasefire. Apparently that didn't happen. What are we looking at now here with this?
Well, it's all he said. With Putin, you never really know because he's kind of a snake and his word doesn't really mean too much. As Trump has said, off the phone and talked to his wife Melania and said, I had the best phone call with Putin, and she'll say, really, did you? Because he just killed like 100 people in Ukraine on the TV right now, and he'll say, you gotta be kidding me. So right now, what it seems right now, the idea is that Russia is going to take some land in Ukraine. It's not clear what, but presumably at least some of the land they've already taken, and in return Ukraine is going to have some security guarantees just to make sure this never happens again. So that's still up in the air. I believe Trump is meeting with Zelensky today, so we'll have to see. In the end, Marco Rubio, Secretary of State, says both sides are going to be happy about some things and
about right. Seems about right, truthfully. And I think that's kind of the way it goes here when you have Trump, who's trying to clean up the mess of those outside of his influence and in some ways the administration before as well. There's going to have to be some give and take for sure for both sides here, but hopefully they can get that done for sure. All right, folks, moving now to the markets. So on Friday, they were gearing toward a mixed bag, though they did finish positive for the week. By Friday, the Dow Jones finished just above the flat line. The S&P 500 was about a third, and the NASDAQ down about 2/5. But for the week ending August 15th, it was another good effort. The Dow Jones finished almost 2 percentage points positive. The S&P 500 and the NASDAQ just under a full percentage point indexes. Pre-markets this morning were mixed, and as we open up this morning, they're still mixed, right around the flat line. The Dow is slightly above. Same with the NASDAQ. The S&P 500 is at the flat line as we speak right now. So not a whole lot to look at there. What's coming this week, folks, and I think this is really kind of what the Fed's Jackson Hole Summit. So that's coming, I think Friday is when Fed Chair Jerome Powell will be speaking at Jackson Hole. As of right now, there's roughly an 85% chance of a Fed rate cut in September. That's according to Fed Funds Futures predictions.
Oh, so that dropped over the weekend. That
dropped a little bit, Sam. Yeah, it really did. I remember last week, I think it was right around 99%. It was about as certain as you could get.
Yes, and then you had the PPI numbers came out. Then it dropped to around 92%, but must have really dropped over the weekend.
So it's coming down a little bit. And Sam, again, my theory with this is I think that's exactly what Jerome Powell wants. I think as that comes down a little bit, you know, in this power struggle between him and Trump, he's able to gain a little bit of the upper hand, which unfortunately kind of, you know, my opinion on this, folks, I think that's become what this is. I think this seems like it's a power struggle where Jerome Powell, who is in charge of a whole lot of things when it comes to the monetary policy of our country, cares a little bit more about winning this battle with Donald Trump than actually doing what's best for the country.
Or at least have the appearance, I'm standing up to the president. I'm not going to be bullied by him. I'm going to stand firm, even if it's not necessarily best for the economy.
Yeah, and unfortunately, that actually just ends up proving Trump's point all along that Powell should be gone, that he's not fit for the job. If someone is going to do something like this where they're now allowing personal grudges to cloud their judgment, they're probably not fit for the job. So that's the way it's going. I don't know if that's true or not. I'm just supposing. I'm trying to use my common sense here, but we are seeing that, Sam. I'll be curious to see what the number is later on, right before the Jackson Hole Summit later this week. But in terms of numbers, not a whole lot. We get housing starts and building permits out tomorrow. We do get the release of the FOMC meeting minutes from last meeting on Wednesday, and then we get existing home sales on Thursday before, of course, the Jackson Hole Summit on Friday, and Powell will be speaking then as well. We also get earnings season winding down a little bit now here, folks. So I saw an interesting stat this morning of more than 92% of S&P 500 companies that have already reported this quarter. Almost 82% have surpassed Wall Street's expectations. So it's been overwhelmingly a solid earnings season thus far. This week, Sam, we called it Retail Week, right? This is the big retail. So today we got Palo Alto. Tuesday you got Home Depot. Wednesday you got Lowe's, Target, and some others. Thursday you got Walmart. That's really the big hitter. They get Alibaba, others, BJ as well.
This will be interesting, too, because out of any of the sectors, these guys are the ones who are going to tell you what's going on with tariffs, how that's affecting their profit margins and so on, because they're the guys who have to import the stuff to sell it.
Exactly. That's exactly right. So hopefully that'll bring some clarity on that for sure, Sam. Couple of interesting quick hitters. And, Sam, I'd love to get your thoughts on these before we do a chat rundown of the ag report. So Trump is imposing some steel and chip import tariffs starting next week. That'll be this week, actually. We also get Intel shares skyrocketed late last week after the report that the Trump admin is mulling taking a stake in the chip maker. I find that pretty fascinating. Sam,
I'm not sure what I think about that too much, right? Because it feels like it's kind of like the government picking winners and losers in the chip industry. I get what Trump's thinking. He doesn't want to have Chinese influence in the chip industry because there are questions about the head of Intel, but still my gut instinct is I'm not a huge fan of that.
Exactly. I think I'm with you too, Sam. And actually, it'll tee up a headline we'll get to shortly. If we don't have time before the ag, we'll get to it after. But there's continual talk of the question of should elected officials be allowed to trade stocks. Scott Bessent actually spoke to this last week, but we'll get to that in a little bit, Sam. But anyway, I found that kind of fascinating. It's kind of that same deal here.
I will say, with Trump continuing to come up with these tariffs in different industries, I think that's also adding to the uncertainty, because we were talking about that with small businesses. They're quite uncertain at this time, even though, for the most part, the trade deals are about done. Scott Bessent says they'll be all wrapped up by October, but we kind of see all the pieces coming together and are getting a feel for how this is going to work. However, Trump keeps coming along with these sector-specific tariffs on different industries, and that does add a kink in the whole market. So I think they're waiting for those to die down as well.
Yeah, and the libertarian bones in me, which truthfully, there's not many of them, but some of them are screaming, no, you can't do that. That's government interference, So we'll just have to wait and see with that one for sure. Sam, I wanted to get your thoughts on this one. The House Republicans, at least one of them, is pushing a bill to make it easier for Trump to fire the Fed chair. Now, I don't know if it might just be not even worth it at this point.
Seems like political posturing to me. Get on Trump's good side, keep Fed Chair Powell in the headlines, keep him as the punching bag for Trump.
Exactly. It could be, might be a dangerous precedent to set, because if something like that were to go through and you don't have, folks, we're operating under the Trump administration right now, but we can't forget just a mere 1 year ago, we were under a very different presidential administration. And if that type of administration has that kind of power, I might not be as in favor of that, So anyway, it's just interesting things that we're seeing here, folks, as we see the continuing battle between the White House and the Federal Reserve. My hope and prayer, truthfully, for both of these men is that they will choose to operate not by lobbing insults at each other or having grudges with each other, but genuinely for what's best for the American people. So it'd be a good prayer.
The Fed needs to work with the White House.
Exactly. So, all right, folks, we got the ag report coming here, and then we'll talk a little bit more on the other side of this break about what's going on. Here's Craig Howard.
This is Craig Howard with your Financial Issues Ag Update for August 18th. Well, corn bounced as traders reacted to extreme heat in the Western Corn Belt. We saw December corn finish the day 8 cents higher at $4.05 1/4. Beans also saw a bounce from the heat coming back in the forecast, along with a better than expected crush report. The July crush came in at 195.7 million bushels. That's 4 million more than the trade was expecting. As a result, November beans were 14 cents higher at $10.42 1/2. We'd also benefited from that rally in the corn as it pulled winter wheat higher. Although Minneapolis December wheat was 2 3/4 cents lower at $5.89 1/4, we saw Kansas City rise by 2.5 cents, closing at $5.28 1/2, and Chicago was also 2.5 cents higher at $5.27. Cotton futures struggled through another lethargic session. The closing bell, we had December futures 14 points lower at 67.54. Livestock futures really surged on Friday. Now, traders have been focused on the screwworm situation in Mexico, and on Friday, Secretary of Agriculture Rollins held a press conference regarding the New World screwworm. Many across the markets were anticipating the reopening of the border, which did not happen. The biggest piece of the announcement was that the U.S. plans to build a $750 million sterile fly factory in Texas, also plan to deploy $100 million in technology such as fly traps, lures, and tick riders at the border, trying to prevent that screwworm from coming in and infecting U.S. herds. Rollins said the border will remain closed until the U.S. can see the screwworm being pushed back further from our borders. And once Rollins said the border was going to remain closed, futures absolutely screamed higher. October live cattle were up $3.82 1/2 as they settled at $230.65 per hundredweight. September feeder cattle rose by $6.32 1/2, closing at $347.35 per hundred. And October lean hog futures hooked to ride higher as well. They're up 97 1/2 closing out today at $90.10 per hundredweight. Class 3 milk futures had a bit of a rebound on Friday. At the close, September was 20 points higher at $18.34. This has been Craig Howgard with your Financial Issues Ag Update. We'll be right back with more financial issues after this.
At Financial Issues, we understand the profound impact your support has in driving our mission forward. Through your donations, we're able to expand our reach on more radio and more TV stations, spreading the word about biblically responsible investing. Now, your money also supports us as we do the critical analytical work needed to identify high-quality, biblically responsible companies. So donate today at financialissues.org/donate. Again, that's financialissues.org/donate.
Where's Mima? We found out Shepard's diagnosis when I was about 17 weeks pregnant. We learned that he was going to need a series of surgeries after he was born in order to give him what they considered a normal life. And we weren't sure how this worked.
Yeah, very emotional, very, very broken. And as my wife just said, not sure how this worked. And called Samaritan, and they said, you just go have that baby. You leave the rest to us.
And just to hear the confidence on the other end of the phone of this is not something that you need to be concerned about at all. You focus on the health of your family, the health of your baby, and we will walk with you every step of the way.
Through the ministry of Preborn, the Financial Issues family has saved tens of thousands of lives of babies. What an amazing job that God has done through you, the Financial Issues family. Would you join us in saving the lives of babies? What an amazing reunion we will have in glory, meeting all the people that we have saved. Please go to preborn.org, that is preborn.org, or financialissues.org, and click on the Preborn banner.
The opinions and recommendations expressed on this program do not necessarily represent the opinions of the station or any of the program sponsors. Additionally, all products or services offered by the program sponsors may not be known by the program.
Thanks for hanging with us today, folks. Great to be here with you all this morning. Nelson, hello to you. George, both Georges actually, Big George and Little George. We've got James in South Carolina. Good to see you there, James. Lisa is here with us. John in Alabama is here with us. Dave and Darlene from Virginia here with us as well. Who else do we have on the chat this morning? A lot of you who I mentioned are posting a lot, which is great. Daniel from Tennessee. Hello, Daniel. Jay in Texas. Good to see you guys there as well. And I'm sure our social media crew is popping as well. Uncle John is there. Happy to have you all this morning. It's a good time here on Financial Issues. The market's here. Take another quick look. Everything slightly positive Each of the indices is just above the flat line as we sit this morning. The U.S. 10-year Treasury yields seem to back off a little bit from their highs last week. They're right around 4.3%. Oil, meanwhile, is 62 almost and a half, 62 and about a third dollars a barrel.
It's called oil.
So that's exactly
oil.
That's right. If I was in the South, that's how I would sound, and I would sound probably much more pleasing to the ears than I do with my sort of off-brand Philadelphia accent. But anyway, we're surviving, aren't we, folks? So, Sam, let's get to that headline that we teased up at the beginning there, right before the ag report there. So Scott Bessent is now backing stock trading bans in Congress. What can you tell us about this, Sam?
Yeah, he's keeping this whole conversation alive about whether or not lawmakers are allowed to or should be allowed to trade stock, saying that, the whole point of Congress is to serve the people, not to get rich off of it. He's citing people like Nancy Pelosi who have eye-popping returns because of their time in Congress, probably, although he can't prove it because of insider trading. He said the American people deserve much better than this.
I didn't say it, but I wonder why.
No. You implied it. You didn't say it, though.
That's right.
Plausible deniability.
That's right. Absolutely.
Yeah. This, of course, comes as Republican Senator Josh Hawley. He's currently considering a bill, we talked about it on the show, that would require newly elected or even re-elected members of Congress to divest their individual equities along with future presidents and vice presidents. So that would not apply to Donald Trump or J.D. Vance. That is, unless J.D. Vance becomes the next president. Trump has said he's at least open to the idea at this time.
Yeah, and you know what? It's interesting. Several of you in the chat, Nelson, I know you posted the chat there, George as well, talking about the possibility of can they trade stocks if there's basically full-on accountability for them. So they trade and they have to post it right away.
That's been an idea, right? Because that gives full transparency, and you could even, let's say there is insider trading, you could even theoretically benefit off of that if you're watching how these lawmakers are trading. So in a weird way, it's insider trading for the masses.
Exactly.
So that could be an idea. Currently, lawmakers are supposed to explain or share what stocks they sell within 30 days. The problem is 30 days doesn't mean too much in this rapidly moving market.
Exactly. That's exactly right. So listen, here's the, I might take a little more of a hardline stance for this than most people do. And I fully get, the individual freedom of all Americans. They should be allowed to do things like that, like trade stocks. But I think I fall more in the camp of I would rather my elected officials just not be allowed to do that at all or have serious safeguards for it. Simply because, Sam, think about this, as a congressman or as some kind of elected official, you get a lot of benefits with that. You also have to give some things up. It's the same with any kind of career. As a pastor, you give up having an off day on Sundays. Sunday is now your work day. You preach on Sundays, you do ministry on Sundays, Sunday's a work day. You have to give certain things up if you pick certain careers. And I do think that this could be a really good thing. It could be a really good thing to have
President Trump had to give up his businesses to become president.
That's exactly right. That's exactly right. Yeah. Sam, am I off base there? Do you think am I missing anything here?
I'd kind of want to split the baby personally. Yeah. I'm not opposed to saying that lawmakers can't trade stocks. I think I take issue with Hawley's bill where he says they actually have to divest, get rid of all their stocks.
Yeah.
I think a much better solution would be to, say, set up blind trusts so that lawmakers can own individual stocks. It's just they have no ability to know what's being traded or what's being done with them. Because I said this last time we talked about it. My issue is not even with insider trading. I really don't care if you're going to get rich off of these things. My problem is, are your individual stocks impacting your political decisions? So I think if you have someone else managing your finances, you're not allowed to know. You make a steel wall around that, set up major safeguards. I think that's a much better solution.
That could be a way to do it. I'm totally with you. I would never be in favor of a forced liquidation for something like that. It's an interesting conversation, folks. Speaking of interesting conversations, Sam, and I even as we're getting into this, I'm questioning if we should anyway, but you know what, we're going to do it because we got time to do it. Social Security.
It's your favorite topic. Again. I picked this just for you.
Security. Thank you, Sam. Thank you so much. Apparently, it's becoming more and more of a burden. What a surprise. What can you tell us about
on the 90th anniversary. That was last Thursday. So happy Social Security Day,
Happy birthday,
Seth.
Social Security.
How'd you celebrate?
Let's see. cowering in a corner and just weeping as I see my Social Security tax being robbed from my paycheck.
Well, we get paid next week or this coming week.
It's gonna be next
then
week.
You'll get to celebrate.
I'll save the weeping for that point.
Belated Social Security Day.
That's right.
So, yes, it was the 90th anniversary of Social Security last week. And, of course, the big question is Social Security going to make it to the 100th anniversary? Because insolvency is on the horizon in the next 10 years. And to avoid it, well, it's not going to be too much fun for you and I, Seth.
Yeah.
It's estimated that Congress, to keep it afloat, would need to increase the payroll tax by 3.65%. So what does that actually mean? In a vacuum, doesn't mean too much, but analysis conducted by the Cato Institute found that such a tax increase would reduce lifetime earnings for 22-year-olds, so people just entering the workforce right now, this year by over $100,000. So that's in present value. So, of course, with inflation, that could expand much more. And the question is, how much are you going to have to keep jacking up those prices over time? So it could just get worse and worse to keep this thing going.
Yeah, absolutely. Boy, Sam, here we go. You did it, didn't you? You set me up here. I have to go.
I poked the bear.
That's right. You poked the bear. Listen, folks, let me just remind you here. I have no problem. If you're of the age of Social Security and you can withdraw, go ahead and do it. Get it while the getting's good. It might not be there in a couple years. Go for it. It's legal. You're not violating the commands of the law of God. Knock yourself out. That said, here's my belief on it. Social Security is a government handout that needs to be done away with immediately.
Should I mute him, folks?
Right.
Press the button. I have the power right now.
Listen,
chat, let us know.
I'm not saying it's a charity. All right. I don't believe it's a charity. I think it's a handout. Here's what happens. The U.S. government legally robs you, steals a portion of your paycheck throughout your working life, and then gives you a tiny fraction of it back when you're in your 60s and 70s.
Which they tax you on.
That's what happens. And they tax you on it as well. Absolutely. And it's diminishing, obviously. Folks, I'm talking, listen, people may hear this and think, oh, Seth is he's such a selfish millennial. I'm actually thinking about my children more often. If there's going to be Social Security when my children and grandchildren get to this age and the taxes have to keep going up, how much of a burden is it going to be on them? It's terrible. It's absolutely terrible. It is a handout. The government steals it, then hands it back for less than it's worth. It needs to be gone, folks. Just has to. It's socialist by nature. It reeks of what happens far too often when the government sticks its nose and its sticky fingers into something that it does not belong, which is taking care of the elderly. I am all for the elderly being taken care of. I have family members who I love deeply, who I want them to be taken care of. Biblically, there's a solution for that, by the way. The first response is family members. And if family can't take care of elderly family members, then that burden falls to the local church. That's according to 1 Timothy 5. The government is never mentioned in there once as the solution for this. It also, by the way, punishes people for working hard. I really don't want that. So look, listen, folks, I have no problem. Again, please hear me say this. I have no problem with you drawing on it. You paid into it. Interestingly enough, just remember when you were paying into it, someone else was drawing on it. And now that you are drawing on it, it's someone else who's paying into it. So you're technically not paying into, you're not getting the funds that you paid into.
It's a Ponzi scheme.
It's a Ponzi scheme.
It's built on other people buying into it, and they have to buy into it. They're forced to.
Yep. What you are drawing on is from someone else, not from what you drew into it. You paid for those who went before you, and now it's your turn, basically. I have no problem with that, folks. It is what it is. The problem I have is us being forced to pay into it in the first place. It needs to be addressed. It has to stop somewhere. How it stops, I'm not exactly sure. Again, I think some kind of cutoff has to happen, and I think we need a politician also who is courageous enough to make the tough decision.
And sadly, as much as I love Donald Trump, this is where his populist instincts, which tend to do him a lot of good, are getting in the way because he knows that it's an unpopular thing to talk about.
Exactly.
I'm not for cutting people off from Social Security, but I think we need to have a serious adult conversation about this because this is just not sustainable for really anyone, both the people drawing on Social Security and people like you and me who are paying into it right now.
Exactly. I'd never want to cut someone's funding off, especially if they're relying on nilly. But Sam, you're right. Adult conversations need to happen, and it's the adults in the room that need to make those conversations. We as young adults are trying to have those conversations and trying to figure that out. But I would prefer not to have a system that undercuts individual freedom, that punishes success, punishes innovation, encourages people to rely on the all-powerful government rather than on the God-ordained system that God himself set up, which is in your old age, if you can't provide for yourself, family steps up and provides for you. And if they can't or won't, then the local church does. That's 1 Timothy 5. You can go read it right now if you want to. I think far better options for relying on Social Security would be investing well. I think saving well. I think working as long as you possibly can, that work is good. And let the government be government, and let families and churches be families and churches, what they're supposed to be. Folks, again, look, I want the elderly to be cared for, but not never from a defunct, not working, frankly stupid government socialist program. I hope I didn't make too many
Tell us how you really think,
out
Seth.
there. But folks, listen, I hope you can hear me say that with all charity and love, for sure. Obviously, I'm not saying don't pay your taxes. I think those taxes are foolish, but I think we do need to pay them nonetheless. Render unto Caesar that which is Caesar's. But hopefully we be a good steward of our country to get people in office that can make good laws that can be a benefit to everyone in the country. God bless you all. It was great to be here with you. Lord willing, we'll do it again tomorrow. Until then, remember, it's all His. Let's be good and faithful stewards. See you next time.
If we ever forget that we're one nation under God, then we will be a nation gone under.
Thank you for joining us. This has been an FISM production.